Hi guys, this is CA Balakrishna. In this class, we will be revising registered valuers. Let us start. Basically, here we will be having only one section, that is section number 247, and we will be having registered valuers rules. We will be discussing the same. Let us start. Section number 247, valuation by registered valuers. First of all, as per Companies Act, if you want to conduct any valuation of the assets, or even as per IBC, Insolvency Bankruptcy Code, the valuation must be conducted only by the registered valuer. So this is clear. Now, there are certain conditions to be satisfied by the registered valuer. We can say certain duties of the registered valuer. What are they? First of all, registered valuer shall make impartial, true and fair valuation. Okay, he must give a impartial and true valuation, and he must exercise due diligence. Okay, and he must conduct the valuation as per the valuation standards. And also, a very important point, he should not conduct valuation of those assets in which he is having interest in any of the preceding 3 financial years, or he is going to acquire interest in coming 3 financial years. He should not conduct valuation of these types of assets. Hope this is clear. Next, in case he contravenes any of the above duties or above provisions, the penalty that would be leviable on him is 50,000 rupees generally. And in case if the intention of the registered valuer is to defraud the creditors or the members, in that case he will be liable for imprisonment of up to 1 year and also fine of not less than 1 lakh rupees, but which may extend to 5 lakh rupees. And in case he is convicted of the offense, okay, if he is convicted of the offense, then he has to give refund of the fees, the remuneration that he has taken from the company, and should also pay the damages if at all any damages have been incurred by the third parties as a result of the false valuation that is conducted by the registered valuer. So this is clear. That is section number 247. Now we will see the rules, company registered valuers and valuation rules 2017. Before seeing the rules, first of all, let us understand the structure of these registered valuers. First of all, for the registered valuers, there will be authority. Okay, authority for the valuation. The name of the authority is IBBI, that is Insolvency Bankruptcy Board of India. This will be the authority, and under this authority, various registered valuer organizations will be registered. Okay, example of registered valuer organizations would be our ICAI Institute, ICSI Institute, and also CMA Institute. There are various other registered valuer organizations. There are around 29 registered valuer organizations. Okay, under these registered valuer organizations, there will be registered valuers. Hope this is clear. These registered valuer organizations will conduct some valuation examinations, and once these examinations are qualified by the persons, they will be known as registered valuers. Hope this is clear. This is how the structure works. Now, coming to the rules. Firstly, eligibility of registered valuers. Okay, for a person to get registered as a registered valuers, he must satisfy with some conditions. I have divided these eligibility conditions into 3 parts. Firstly, there will be pre-registration qualifications. Next, educational qualifications. After that, post-registration qualifications. First of all, we will see the pre-registration qualifications. The person has to possess these pre-registration qualifications before he applies for the registration as a registered valuer. What are they? First of all, he must be member of registered valuer organization. Okay, he should have written the examination of examination conducted by any of the registered valuer organization and must have qualified the examination, and he should become the member of such registered valuer organization. Hope this is clear. That is the first precondition before he applies for registration as a registered valuer with the IBBA. The second condition is recommendation by RVO. Okay, the registered valuer organization must recommend this person to the IBBI for registering as a registered valuer. Next, this person must have qualified the exam within 3 years preceding the date of application for registration. Okay, in the preceding 3 years, he should have qualified the examination conducted by RVO, and this person should not be a minor, should not be an unsound mind, and should not be undischarged bankrupt. Next, this person must be person resident in India, and no penalty under section 271J of Income Tax Act should have been levied on him. If at all any penalty has been levied, then he will be disqualified for a period of 5 years. So this is clear. Next, such person must be fit and proper person, and if at all such person has been convicted of any offence involving moral turpitude and imprisonment of more than 6 months but less than 7 years has been awarded to him, then in that case he is not eligible to act as a registered valuer for 5 years. Hope this is clear. In case the imprisonment awarded is more than 7 years, in that case he is not eligible to act as a registered valuer for lifetime. Hope this is clear. These are the pre-registration conditions. Moving to the educational qualifications, he must have any of these 3 educational qualifications. Firstly, he should be holding either postgraduate degree or diploma along with an experience of at least 3 years. Okay, in case he is not having a postgraduate degree or diploma, he should have at least a bachelor degree, and along with the bachelor degree he should have at least 5 years of experience. Okay, even that would be sufficient. Or he must be member of any professional institute established by an act of parliament. Okay, that means like our CA, chartered accountancy, or company secretary, we are eligible to write the examination conducted by RVO, and but we should be having 3 years experience. So this is clear. The person should be having any of these 3 educational qualifications and post registration qualifications. Firstly, after registering with the authority, he must at all the time possess all the pre-registration qualifications and also the educational qualifications. So this is clear. That is the first condition. Next, he must comply with provisions of the act and the rules. Okay, and conduct the valuation of only those class of assets for which he has been registered for. See, for obtaining the registration, there are certain 3 types of classes of assets. Okay, we chartered accountants are eligible for conducting valuation of only financial assets. Okay, financial assets and securities. You are eligible to conduct the valuation of only this class of assets. Okay, now the person must conduct the valuation of those assets only for which he has been registered. Okay, apart from the class of assets for which he has been registered, he should not conduct the valuation for other classes of assets. So this is clear. Next, he must maintain record of each assignment for at least 3 years. The documents relating to the assignment must be maintained for a period of 3 years, and he must comply with the code of conduct of the registered valuer organization. These are the eligibility criteria of registered valuers. Now the next question is, can a partnership firm and a company be appointed as registered valuer of any of the company? The answer is yes. A partnership firm and a company can be appointed as registered valuers of any of the company, provided that it should not be falling in these criteria. Okay, it should not possess these disqualifications. What are they? Let us see. Such partnership firm or the company must not be having objects other than rendering professional services or financial services. That means the objective of such a partnership firm or the company must be either providing financial services or rendering professional services. Apart from these objectives, it should not have any other objectives. Only then it will be eligible to be appointed as a registered valuer. We will be calling them as a registered valuer entity. Okay. And such a partnership firm or the company must not be undergoing bankruptcy. Okay, it must not be undergoing corporate insolvency resolution process. That is the second condition. And at least 3 partners or directors, or all the partners or directors, whichever is lower, must be registered valuers. Hope this is clear. In this, if at all any of these 3 disqualifications are being possessed by the partnership firm or the company, then it cannot be appointed as a registered valuer. Hope this is clear. Now, how to conduct the valuation? The valuation must be conducted as per the valuation standards, and these valuation standards will be notified by the central government in consultation with the committee. Okay, a committee will be framed for designing these standards, and based on the recommendations of the committee, the central government will notify the standards, and it can also modify the standards based on the recommendations given by the committee. Next, can registered valuer temporarily surrender his registration? Yes, the registered valuer can temporarily surrender his registration, and after he surrenders the registration, the registered valuer organization must, within 7 days of surrender of such registration, give information to the IBBA. Hope this is clear. Next, whether a complaint can be filed by any person against this registered valuer and the registered valuer organization to the authority. Yes, a complaint can be filed against the registered valuer and the registered valuer organization along with a fees of 1000 rupees. The complaint can be filed with the IBBA authority. Hope this is clear. By this we have covered the revision of registered valuers. Hope this is clear.